are the result of regulation that has basically, come down hard on gold money. And so they have to devote so many of their resources to dealing with regulations that they really don't have time to answer a lot of these questions, which is very unfortunate. Yes, I mean, the business is not able to offer the type of services that they initially contemplated thanks to the regulation. So basically, look, it's still a good place if you don't have to worry about talking to individuals. If you can go online, you can get a good price on your gold and silver. It's only 0.5% above spot. They'll store it for you. The storage fees are low. They're not non-existent like they used to be. The reason they had to introduce storage fees was because the cost of providing the service went through the roof because of the cost of complying with all the regulation. So it's an unfortunate situation, but it's still, if you want third-party storage and you want to be able to go online and just buy some physical gold and silver to keep online, not really to use it in commerce. It's not really gold money anymore where you're going to use it as a medium of exchange and you're going to get your debit card and all that. I mean, it's just a good place to store gold. Like we store gold in the Perth Mint. You can store some with gold money. And you can go and buy. I mean, if you're a larger investor, I mean, you can talk to my guys at Schiff Gold. They can maybe help you out. But again, we can't talk to all the small investors. There's just not enough time in the day to do it. But they're definitely legitimate. I don't think it's a scam. But they have to deal with money laundering. And sometimes, if you do something that is suspicious, you may not think it's suspicious, but you set off some kind of red flag. And now they have to file, one of these SARs on you, and now they've got to do all sorts of stuff. You think that it's because they're not a good company or there's something wrong. It's because they're doing what the regulators are telling them to do. And once you suspect somebody is money laundering, you can't tell them that you suspect them because then you're breaking the law. You just have to turn them into the government and then see what happens. So it's unfortunate. I mean, I wish they didn't have to operate in this world, but unfortunately they are. Let me just send, hold on. Gotta send this, ticket. Can't turn ringer off on my laptop. All right, well, actually, maybe I could just get rid of this, no, it's not FaceTime. Let me get rid of this. If I can close this quit. I'm going to quit the messaging. Maybe that'll do it. Okay, anyway. Do the central banks today and others in history really think they can avoid hyperinflation? I don't even know if these guys think about hyperinflation. The Germans, right? The Bundesbank used to be the one bank that you can count on to be worried about hyperinflation. And the reason is because they experienced it in the Weimar Republic. So the Bundesbank always worried about it. And I imagine that they still worry about it. The ECB doesn't seem to give a damn, right? They keep talking about we want to get inflation up to 2%, but below 2%, close to, but not 2%. But I do think that once we get official inflation rates above 2% in Germany, the Bundesbank is going to have to step up and exert some influence on the ECB. But right now, people are worried about other problems because everybody thinks that inflation is the furthest problem that we have to deal with. And since we didn't get in trouble inflation-wise, right, all the money they printed after the financial crisis, since it didn't show up in a bigger way in consumer prices, the central bankers have been lulled into a false sense of confidence that because it didn't result in runaway inflation last time, that it won't run into runaway inflation this time. They are wrong. One, because it's so much bigger now, the amount of money they have to print is so much bigger, and the economy is shutting down, something that didn't happen in 2008, right? None of these businesses stopped producing. So it's night and day. What is happening now is so much worse than real estate prices going down and people not paying their mortgages. This is 100 times worse than what happened in 2008. And the amount of money that's going to have to be created is much, much worse. The number of companies that need to be bailed out is much greater. The cost of the bailouts are much greater. And then again, you have to remember, the reason everybody thinks it worked last time, and I keep saying this, the reason people think it worked is because it was temporary. It was an emergency measure. It was never going to be done again. Ben Bernanke even told that to Congress when they said, are you monetizing the debt? He said, no, we're not monetizing the debt. Monetizing the debt is when a central bank buys bonds from the government and holds them permanently. He said we're buying temporarily. We're going to sell these bonds when the emergency is over. Well, I said he was lying, and I was right, because none of those bonds have been sold. And now they're buying more bonds than ever. They're buying everything. Nobody is going to believe that the Fed is going to ever be able to sell any of this. Nobody is going to believe. The balance sheet's going to go well above 10 trillion. If they couldn't shrink a $4 trillion balance sheet, what hope do they have of shrinking a $10 trillion balance sheet? When the U.S. national debt goes to 40 trillion or $50 trillion, if the Federal Reserve couldn't normalize interest rates when we had 20 trillion of debt, how will they do it when we have 50 trillion of debt, right? People will realize that this will never end. And because it'll never end, that's when we're going to have hyperinflation, because no one is going to want to hold the dollar. Who's going to want to hold U.S. Treasuries for 30 years with a 2% yield? Nobody. Nobody's going to buy any bond. It's going to be the central banks are going to buy all the bonds, but that means they're worthless because the currency they're denominated in. So at this point, it's like it's the end game. I've already said it's like we just jumped off the top of the Empire State Building almost when it comes to hyperinflation. It's like when we were still up there on the roof looking down, considering, we walked all the way up the Empire State Building and we took the elevator. We could have changed our mind if we were, we don't have to kill ourselves. We have time to think about it. Maybe we could phone a friend on a cell phone and maybe they'll talk us out of it, right? But once you make that leap, that's it. You can't change your mind on the way down. And I think almost that's where we are. I don't think they're going to be able to change their mind. Once they unleash this, I think we're done, right? I think we're going to have to reap what we sowed on this one. Anyway, you see here. Bay Area Raider, $70. Should I buy a house now with 3% or wait till after the crash? Look, if you can get the mortgage and not the house, that would be the best way to go. But look, as I mentioned about my house in Connecticut, right? Houses in Connecticut where I live are selling for less than the cost to build them, and you get the land for free, right? You can buy a house in my neighborhood, right, that is relatively brand new, like less than 10 years old, that's either never been lived in or was barely lived in, right? You can buy that house for less than it would cost you to build it, and you get the land for free, right? Land that may have been worth $500,000 to $1 million an acre, you get that land for nothing. And you can buy a house that's on the property that if you built it today, it might cost you $2 million to build it, and you can buy that house with the land for $1 million. And you can get your 3% mortgage. Now, you're going to have to pay a big property tax. That's part of the downside. The property taxes are high. Now, the question is, yes, in a way that can make sense, because what's going to happen when there's hyperinflation, nobody will ever be able to build that house for that cost because the cost of the raw materials. Look, I remember the first time I went to Budapest, when I was in my 20s, I went to Budapest, long before or maybe it was right after the Berlin Wall fell or whatever that was. But I came into Budapest from Germany on a train, and they really didn't have any places to stay. I was a young kid. I was in my 20s. I was 28. And so there was a woman at a train station that had a sign that she was renting rooms for 10 marks a night in her room. And that seemed like a good price to me. And I said, fine, so I got in her car and she drove me to her house, which was in the Buda Hills. Very nice house, very nice neighborhood. And she was renting out rooms. And these are older houses that were built, a long time ago. It was a nice old house. And all the neighbors are renting rooms. This was probably a wealthy neighborhood at one time, but now everybody has to rent out rooms because the communists wrecked Hungary. But she's renting out rooms for 10 marks. And I remember when, in order to go into town, I wanted to go into the city, and I wanted a cab to take me into the city. And the guy was like, well, I don't know if you're going to want to take a cab. It's really expensive. Maybe you want to take a train, or I think it was the woman. Maybe I guess I was going to take a cab. And I said, really, how much is the cab going to be? And it was about $3. So I was like, what do I